Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, Jim, good to be with you, and I always look forward to our get-togethers.
Bob, we love to answer questions from our listeners, so we have two of them today. The first one's from Kathleen. Kathleen asks, Bob, are we really in a K-shaped recovery as the financial media claims? How can we be entering a new bull market in stocks when the real economy has begun to contract? One would think that the pain being felt in the real economy will soon be felt in the currently euphoric stock market. This all brings to mind Canadian songwriter Gordon Lightfoot's song Sundown. That's a beautiful song, particularly the lyrics. Sometimes I think it's a sin when I feel like I'm winning, but I'm losing again. I should have my guitar and be playing along with this. Sometimes I think it's a shame when I'm feeling better, when I'm feeling no pain. Bob, are we approaching Gordon Lightfoot's sundown for the markets?
That is, Kathleen, that's very literary. Now, on a K-shaped recovery, my first thought now is the K right side up or laying flat on its back. I'll be damned if I know. But at any rate, the financial markets, which got trashed into March, have had a V bottom and a straight up. And maybe the high in early September was sort of a natural high for the market. And of course, the economy got trashed beginning in February with the Bolshevik shutdown of the world economy because of influenza. So we were left looking just at the stock market, which became our work March 19th. We'd noted that previous periods of heavy liquidation would run for about 2 months, and 2 months was at the end of March. So our March 19th piece suggested that a bottom was at hand, and that the rebound would likely run into mid-year, and then of course it got extra legs. But anyways, with our work, we use history to look for times when financial markets will change, and when we get to a period where it can change, we then use the technicals to determine, like in March, if it was sufficiently oversold to consider a rally, or more recently, was it sufficiently overbought to consider a correction, or perhaps more. So, your question about the pain being felt in the real economy will be felt in the currently euphoric stock market. There's always a symmetry, Kathleen, where exceptional overboughts are always followed by eventually exceptional oversolds. And but for the last few weeks, the stock market wants to look at everything as being positive, and it's hanging in there. But I think the Achilles heel will be that the U.S. dollar index, the DX, came down with the rebound out of the March disaster, and has built a base, became oversold, built a base, and is poised for a rally. And the next rally in the dollar will probably not just disappoint a number of pundits, but it'll also be part of the next problems of liquidity. But Kathleen, thanks for your question, and I always enjoyed Gordon Lightfoot's Sundown.
Gosh, when I was a kid, I remember I wanted to go to the Gordon Lightfoot concert, and my mom said, "You can't go; it's way too expensive. Tickets are $5."
Yeah.
So I went and saw the RCMP band instead.
Oh, there you go.
Because it was only 2.
Yeah.
And I enjoyed that experience as well.
Good.
Our question from Michael Bob is, hi, Jim. I have a question for Bob. Good start. A well-known former hedge fund manager has just forecast Bitcoin will rise to $50,000 in 5 years. Also, some major gold experts are predicting that gold will also be at $50,000 an ounce in about 5 years. The Bitcoin people say we should sell all our gold and buy Bitcoin because gold is just a yellow rock and too heavy to carry around, in contrast to Bitcoin, which weighs nothing when carried in one's Bitcoin wallet. Bob, longer term, are we better off with a yellow rock, a virtual commodity like Bitcoin, fiat dollars, or paper assets like stocks and bonds?
Yeah, Michael. A Bitcoin forecast of 50,000. It seems like another one of these things that the Fed is going to depreciate the dollar to zero, and things like Bitcoins, and obviously he thinks the same. Others think the same thing. Gold can go to 50,000. The highest estimate I've seen is the guy, I'll leave his name out, who is supposedly close to the CIA, and he's calling for $15,000 on gold. And that's the old recipe from the 1970s, whereby the Fed never changes its behavior. It is always throwing more credit into the market than is needed, and that over time forces depreciation of the dollar. But then the public runs the markets, and so in one decade, the speculation will be in tangible assets, like commodities and gold and silver in the 1970s. And then the public then gets burned out in those. They crash, like in 1981, down to many things, crashed down to 1982, when then the public decided it was going to play in the financial markets, stocks and bonds. And actually then I was presenting our research to financial institutions in the early 80s, and one of the slides was that no matter how much the Fed prints, that stocks and bonds would outperform commodities. Well, that was heresy at the time. And, of course, what happened is we went into another new financial era where stocks and bonds did outperform commodities for most of the time. And then that pattern, of course, occurred 5 times previously in history, where you have a great commodity boom, bang, a crash, and then the public shifts over to speculating in stocks and bonds. The first one was commodities in 1711, and the famous or infamous South Sea bubble of 1720. Now, here's the other thing, is that in each case, once you had the classic financial bubble conclude, in each case it was followed by chronic deflation of all the hot assets, and that includes formerly hot assets such as commodities. So what you're getting now is a rebound out of a remarkable crash, and you also have the senior central bank doing what it did in 1929, which was to provide huge amounts of liquidity. Also, in 1873, the U.S. did not have a central bank. They had the Treasury system, which at the time pundits thought would be able to buy enough bonds out of the market to prevent the contraction. And the Depression ran from 1873 to 1895. So all of this has happened before with difference, little differences here and there. So on the pattern, the next step would be deflation in all of the hot assets, and I would assume Bitcoin. And also, using the term yellow rock for gold is fun, but please, it's an element on the periodic table that has certain geological characteristics such as the yellow color, luster, malleability, and ductility, and it's just wonderful. But here's where the gold bugs have not done enough research, and they don't understand that in a post-bubble deflation, gold is the one item that does well because the real price goes up, and that also improves the operating margins for mines. And you've had your best bull markets for the gold sector in post-bubble contractions when deflation of all other assets has been the problem. And I don't see where anybody else has done this research that I'm talking about, like just plain history. And so I can see how others who have learned the themes of the 1970s who think that the 1970s are always around, but they're not. We're going into the equivalent of the 1930s, so one might be prepared. So, and at the moment, or in the summer, late August, early September, the gold sector became overbought, and we have been calling for a correction in it. So, for the long term, in a post-bubble contraction, gold stocks have been solid performers and have outperformed most other sectors in the investment world. Thanks for your question.
And Bob, I'll throw in my 29 cents worth here. At least with gold, even if the price goes down, even if it goes down to almost zero, you still have a really good doorstop. Whereas with Bitcoin, it could just disappear forever. You know, a power failure. I
would say keep some real gold, like bars or coins, as an insurance policy, and because gold does very well in a deflationary world, and it'll also keep pace in an inflationary world. But I think we're going into a typical post-bubble deflation.
We'll have more with Bob Hoye right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Bob Hoye. Bob, a hedge fund manager, says the reason we have the nightmare of stock evaluations being sky high is young, dumb managers of money. Are they right? Or is that person right?
Yeah, I made a lot of money in the 1967-68 bull market. And then when it was all over, you look back over your shoulder and you realize that there was a whole bunch of new accounts getting into the market and also a bunch of new brokers. And they did it to themselves. And I don't know how you can put the measure to this, Jim, but I think that currently there are more novices in the market since the most in the market since the late 60s. And in this Robinhood facility for trading, and then also the government suddenly starts sending out a whole lot of money, And also, many people are staying home and got on to trading stocks. So it reminds of Vancouver back in the late 60s when the more popular type brokerages, they all had offices right on the street, so that you could get walk-in trade. And they had customers' rooms where people would sit there all during trading hours. And they had boards up with the and helpers there marking the quotes on the board. They'd have the name of this or the symbol of the stock there, and then they keep trading, putting up the price on the stock. So although it's sophisticated and through the internet, but it's the same thing as back in anytime way back when brokerages were walk-in offices and clients would come in and sit in the customer's room and watch the board. So I think it's a very important high in here. And of course, like any really important high, it's always a struggle between the bulls and the bears until the next trend is set. And of course, people are in love with the stock market because it's making them so much money, and they don't want to see that game end, but they eventually do. So, that was quite a headline.
Bob, historically, how have day traders done?
Oh gosh, I haven't looked at a study on that for a while, because you had day traders in I think that term first appeared with the .com bubble that completed in March 2000. And but you've always had day traders going back to when Jesse Livermore, who was one of the great traders in history, and he started trading at the bucket shops. Now, a bucket shop was whereby you could go into a walk-in brokerage and sit there, and the chalkboard would have the quotes on the latest things. So you would then make a bet to either long or short a big stock, and the brokerage firm would offset it, trading hopefully against the real market. So Jesse Livermore became so good at trading in that kind of a market that the brokerage firms, bucket shops, wouldn't allow him in because he always made money, and it was against the house, which was the bucket shop. So then he eventually ended up trading on the big board. But public participation, and I was talking to an old friend of mine. He was one of the best traders I know. And the saying in New York decades ago was that the public is not allowed to make money. And the irony, that's ironical, because what it is the public makes the market. And when all of the public is buying, they can't possibly make any money out of it. And in Vancouver, it was a little more brutal. And that was that the mooches were not allowed to make money. And the mooches, of course, are the term that in New York they use the public. But also with promoters and creating stocks and promoting stocks, knew that you needed the mooches to buy the stock. And of course, the whole point of a promotion is to create stock and get the hell out of it. You just, promote the stock up and offload your position. Oh, Jim, and we got to do another really old saying from the Vancouver Stock Exchange. And it is the wonderful definition of a promotion. And we'll go through it. And it is, in the beginning, the promoter has the vision and the public has the money. And at the end of the promotion, the promoter has the money and the public has the vision. And that is a profound truth in that old saying. And lately, the public really has the vision that stocks go up forever. And what we see is technical excesses that will eventually be followed by a correction or perhaps in time a cyclical bear market.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, Goldman Sachs, you say, is now betting against the U.S. dollar. What's the story there?
Yeah, I saw that one, and what they were looking for is a Democrat win on the U.S. election on November 3rd. And the Democrat win, of course, would then be interventionist government, very aggressive central banking, and so, ironically, Wall Street has been funding or donating funds to the Democrat Party, and the Democrat Party is in its most anti-business form ever. But anyways, Wall Street's backing them, and I think it's crazy, but we'll see how the election goes. Some serious people I read are pointing out that the intensity of the political struggle going on now hasn't been seen in the U.S. since the time going into the Civil War, early 1860s. So, yeah, I agree with that the times are hugely intense, and I think the intensity of the left and belligerence of the left is that with the election in 2016, where Trump won, and he was fronting what I call a benign popular uprising. And so what has happened is that for a couple of generations, the ambitious left has had very little opposition. And then all of a sudden they get a strong and widespread no. It's driven them absolutely up the wall. They just, it's a non-stop temper tantrum by 4-year-olds. And it is, to this historian, absolutely astounding to watch. And recently I wrote a piece, people can look at it in the website, that suggests that this appears to be, at least with the belligerence of the left and the Democrats and the mainstream media, is similar to the early stages of the Russian Revolution that began in 1917, or the French Revolution that began in 1797. And the dreadful part of those is that popular dissatisfaction was corrupted by neurotic intellectuals into murderous tyrannies, dictatorships. And it took them, like, for example, with the Russian Revolution, it took until 1989 for it to end, with when the ordinary folks brought down the Berlin Wall in late 89, and that also marked the end of formal communist governments in many countries. But then, of course, what has happened recently with the hysteria about weather, and then the incredible hysteria about another Asian flu, the left has used it to shut down the economy, unseen since, you could say the early 1930s in Soviet Russia, when the theories of a crackpot called Lysenko was applied to agriculture. And I think the death toll due to famine was about 8 million people on that one. And what is happening here is the Democrats and the media are doing exactly the same thing that their counterparts did with the French Revolution and also with the Russian Revolution. It's astonishing to watch. But I'm sort of an optimist, is that I think that the public is going to get wise real fast, and begin to shut down the excesses of ambitious control freaks. So we live in, as the Chinese say, we live in interesting times.
Yes, a curse me, you live in interesting times.
Yeah.
Another headline, Bob, that caught your attention. The world has spent $3.7 trillion on climate change projects between 2011 and 2018. Is that money well spent?
Part of that story, Jim, is that 55% of the money went into solar and wind energy projects, which every time you build one of those, they don't work all the time. I mean, the sun does go down at nighttime. So each unit of solar or wind energy has to be backed up by a reliable unit of energy. And more lately, the very efficient has been natural gas. So, it's crazy. But only 5% of the money was spent trying to prepare or adapt to major weather events, like maybe raise the dikes a little higher, or in the case of London, they've got those big tidal gates on the Thames. But no, this is 55% of the money going into stuff that doesn't work, stuff that's unreliable, and stuff that has to be, so it's more than double the cost, because you're also screwing up the grid for distributing the electricity. But as I say, each unit of this dream world solar or wind has to be backed up with a unit of reliable power. And this here is another political struggle where the control freaks have become amazingly ambitious in the face of utter nonsense. Of course, this was the case with the experiment in communism in Eastern Europe and in China. The control freaks would not admit that it doesn't work until eventually a popular reform movement more or less shut it down. So again, Jim, I'm an optimist. I think ordinary folk can engage their common sense and realize that no matter how persuasive or how appealing it is, if it doesn't work, it doesn't work. And I think the next couple of years can see important steps being made on a popular reform of idiotic governments.
Bob, my question always is, how can carbon taxes control volcanic eruptions, solar cycles, and other celestial events that are major climate changers?
Yeah, well, you know, I took a degree in geophysics years ago and have stayed up to date on it. And atmospheric carbon dioxide had nothing to do with actual climate change. But it's the one thing control freaks can use to control people. But I've ironically written that if they were serious about changing or modifying the climate, they would change the solar cycle to their convenience. And also what drives climate change is the differences in the distance of the Earth to the Sun. And so then they should change orbital mechanics. That would have an effect. And then other things that change climate has been plate tectonics, where you got continents drifting around and forming mountains, such as the Himalayas, such that you get monsoons and things like that. So if they then are really sincere about changing the climate, they would then alter the continental drift. So, of course, I'm being ironical, but fiddling around with atmospheric carbon dioxide is utter nonsense. But my point is that if they understood how the climate really changes, they would go out and change the solar cycle. I hope there's some liberals listening to this one.
Also, you mentioned in that article only 5% of that $3.7 trillion was spent on things that would help you fight changes in climate physically, like seawalls and so on. And when people think, oh my God, if the ocean rises, I look at the Vancouver seawall around Stanley Park. It was mostly built by one man who would go out for an hour or two after work and start piling up the rocks and cementing them. So if you live in low-lying areas, folks, perhaps, you should just be civic spirited and everybody for half an hour after work just start piling up the rocks and reinforcing the areas that need to be reinforced against higher oceans.
Oh, yeah.
Yeah.
Well,
now, that's much more practical.
Sure.
And it doesn't cost much.
Now, here's another one. The low-lying cities in Holland have been below sea level for 500 years. And why are they viable at below sea level? Because the folks built dikes and drained salt marshes. And, as I said, Holland, part of the major cities in Holland have been underwater for 500 years.
It sounds like my bank account.
Yeah. Now, also, now the favorite hysteria is, of course, about rising tides in Bangladesh, of which a whole lot of that is estuary. And who's stopping people from going and doing the same thing as the Dutch did? Build some dikes. And, of course, the success of building the dikes and draining swamps, that's ironical. The Dutch called them polders, and they've been able to raise much of their own agriculture, huge agriculture, and they're still exporting. So rising tides can be adjusted for. Rising tides cannot be prevented unless you go out and change the solar cycle. So the whole thing, these control freaks are absolutely crazy. I'm telling you, Jim, absolutely crazy. And I would love to debate. God, I'd love to debate Al Gore or Michael Mann or any of these guys, Jim Hansen. Oh, I'd love to. But, of course, they don't debate anybody who is well informed on the actual physics of climate. So I just write a few articles every once in a while, and we post them in the website. So,
Bob, thank you so much for chatting with us.
Jim, I think we've had some fun today, and I look forward to next week.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.